Now, let's talk about some other types of liabilities that we have. Accounts payable, this is one we're familiar with, or at least I hope we're familiar with. We've talked about this one since chapter 1, chapter 2, basically. Um, so accounts payable are really those amounts that we owe to vendors or servicers, right? Um, so when we go and we get a service provided to us, or maybe let's say we purchase $500 worth of red pins, but we don't use cash to pay for them. We purchase these on account. Remember, purchase them on credit, purchase them on account. That is accounts payable. This is a liability that we are creating to remind ourselves, hey, we owe somebody some cash. Okay, so don't forget that. Sometimes you can see these referred to as trades account repayable or trade accounts payable. Don't worry about it. It's the same thing. It's just like with everything else in accounting, people have preferences as to how they what they call these accounts. Trade accounts payable is just one of those things. Okay. Um, Most often, these are current liabilities. You could have some long term portions of accounts payable. It just depends on the terms of the payable, right? It just depends on the terms that you've accepted with the vendor, with the service provider. However, just for this class, they're going to be current. If you see accounts payable, it's a current account, okay? We also have payroll liabilities. These get somewhat complicated, so we're just going to talk about these conceptually. The only kind of calculation I may have you guys do with these on an exam is to say you have here is your salaries for the month. It would be something along the lines of you have 6 employees, they make $500 per day, they have worked for 6 days, so you owe them this amount of money, plus you have these other accounts, federal taxes, FICA taxes, contributions to health insurance, contributions to retirement plans, those kinds of things. I would have you calculate that. What I probably won't do this time is something like what we did in chapter 4. And if you do want to go back and review salaries payable, it is in chapter 4, where we go, okay, your pay period doesn't end until Friday. You're not going to pay them cash until Friday, but your month ends on Wednesday and you have to report. Okay. That was that tricky one where you have to recognize the expense in the previous month, but we create a payable because we're not actually paying them the cash until the end of the week, which is in the next month. Okay, probably not going to do that again, but I will have you calculate salaries. So um, you just need to be aware that other types of payroll costs that you can have in your payroll liability are going to be things like federal and state unemployment taxes. That's something that you don't see as an employee, but your employer definitely sees and feels. Okay. This is an additional expense that they have to keep you around as an employee. You also have the matched portions of Social Security and Medicare. Next time you see your check stub, look at the FICA tax. That is what that is. It is what you show on your check is your contribution. You contribute like 7.42% or something. There's an actual tax percentage. I don't remember what it is off the top of my head, but it is around 7.42 or 7.62 or something like that. That's your portion. That's your contribution to those social programs. Your employer matches your contribution to those social programs. Okay. So that's another expense that they have to include in your payroll. Contributions to health, to health insurance, disability insurance, life insurance, all of those things, those are things that are being paid in the background, okay, by your employer. If you think that your cost for premiums for health insurance is expensive, you should see what your employer is contributing for your health and disability and life insurance because it is expensive as well, and you don't see that contribution. There's also contributions to retirement plans. So if you work for a company that has a 401k or a 503b or whatever the case is, let's say you have a 401k and they match up to 6%. So for up to 6%, if you are contributing 6% out of your check, which you see, your employer is also contributing 6% of your salary to your retirement plan. These are reasons why when I have friends that ask me, hey, what would you recommend that I hire an employee? I always tell them not unless you're 100% sure you can afford it, because an employee is going to cost you almost double what you think they're going to cost you simply because of all these payroll costs that are included in the background. So just be aware of those. We have some other current liabilities, but these are all ones that we've talked about early in the class, right? You've got deferred revenue. This is when a customer pays you cash, right, in advance of you actually performing the service or providing them the good, okay? That's a deferred revenue. This is our unearned revenue account, right? That's that liability that we increase. And we've been talking about that since chapter 2, chapter 3. You have sales tax payable. So imagine you're at Walmart, right? And you go and you see that there's a $59.99 item. You pick it up, you take it to the register, and you pay for it, but it turns out to be $64.27 or whatever the case is, right? You are paying sales tax on that. Walmart does not get to keep that additional $5 and some odd cents. They have to remit that back to the state. Okay, it's a whole different type of accounting. If you're an accounting student, you'll see that in 301. You'll calculate sales tax payable and all that kinds of stuff. And then you've also got your current portion of long-term debt. So that's, let's say you have a note payable that you've signed. It's a 5-year note payable. 4 years of that is going to be long-term. 1 year of that will be current, right? That's your current portion of your long-term debts. The next kind of liability we got to talk about is a new one. This is a contingent liability. Contingent just means that one event is dependent on another event happening, okay? These are uncertain situations. These could result in a gain or a loss. They could result in nothing. We're not sure. It's contingent on a situation or an event, another event occurring. Okay, it's the outcome of that future event. We only report contingent liabilities in our financials. You either report them as a liability themselves inside of the statement, or you may provide information about that in a note to your financial statements. But they've got to meet certain criteria based on the following criteria. The first one is likelihood. What is the likelihood of this payment occurring? Be familiar with these, okay? They will be on your exam. You need to be familiar with these likelihoods. The first one you got is probable. This just means it is more likely than not to occur. It is probable that this event is going to happen, okay? The next one is reasonably possible. I don't like the definition that they give here, but it's kind of the accepted accounting definition, that it's more than remote. The probability of this happening, the likelihood of this event happening is more than remote, but less than probable. To me, I've always thought about this as this is a toss-up. It could happen, but it probably won't happen, okay? And the last one you've got is remote, and this just means that the chance is slight, okay? It just means there's a pretty insignificant chance that this happens. We're not really even worried about it, okay? The next thing you need to take into consideration is the amount of the payment. Is the amount of the payment reasonably estimable for us? If it is, good. But the flip side of that coin is that it's not reasonably estimable. It's hard for us to make that estimate, okay? Contingent liabilities only need to be recorded if the loss is probable and the amount is reasonably estimable. Highlight that, know that, because that is what you'll be tested on from a conceptual standpoint, okay? So highlight that bottom line right there and just know it. The example I like to give in class is this, okay? Let's say I'm walking through Walmart and there's a puddle of water on the floor. They do not have a sign up saying that the floor is wet and somebody could possibly slip and fall. I slip and fall, I break my leg. I decide that I don't want to pay for these medical bills. Walmart is responsible for that. They should be paying for those medical bills. I decide to sue Walmart, okay? What is the likelihood that I win that lawsuit? And is the amount of the payment reasonably estimable? The answer to those are yes, right? There's a good chance I win that lawsuit because they were at fault. They didn't put any signage out. I wasn't aware of it. I fell and I hurt myself. The amounts are reasonably estimable because I can just provide them with medical bills. They can get a good idea of those medical bills, right? So this is a contingent liability that they would likely record as a liability, or they would record it as a note to their balance sheet, okay? Now the other example is, let's say I go to Walmart, I want to bake a cake, so I buy a box of cake mix. I get it home, I open it up, and there is a bug in it, a roach. Okay? It scars me for life because I hate roaches. It's disgusting. They're scary. I don't like them. Okay? I decide to sue Walmart for mental damages. What is the likelihood of me winning that lawsuit? What is the likelihood they have to pay me? Pretty remote, right? There's no way for me to prove that that roach didn't crawl in that box from my cabinet. Okay? It's a pretty remote chance. And there's really no way to estimate the amount that they would have to pay me. So that is a liability that they're not going to record. That is a contingency they're not going to record. They're not even going to mention it to their investors in the notes. Okay? So just think of it that way. Contingencies, contingent liabilities, we typically, when we're talking about them, we're typically talking about them in terms of these are lawsuits. Okay? So if you guys have any questions about this section of the liabilities, let me know, and I am happy to answer your questions.